Welcome to the Deep Dive. We're here to cut through the noise and give you the real insights from, well, often pretty complex information. And today we're zooming right in on a major player shaping India's financial services landscape. Yeah, we're doing a deep dive into Bajaj Finserv Limited's Q1 FY26 results, the mission, to really unpack the key highlights, get a handle on how all their different businesses are doing.
And sort of connect those numbers back to their bigger strategy.
Exactly. We'll cover everything. The core lending, the insurance side, even those interesting new ventures they're building, plus the big strategic stuff. We want to give you that comprehensive picture, but, without drowning you in data. Oh, and quick note for anyone maybe less familiar with Indian financial terms, you'll hear us use crore, that's 10 million, and lakh, which is 100,000. Just so you're tracking.
Right. And for this, we've gone straight to the source. We're looking at their official Q1 FY26 results, the investor presentations, press releases, basically pulling out the key nuggets for you.
Okay, so Bajaj Finserv's Q1, it feels like a story of resilience and maybe some clever strategy in what's definitely a dynamic market. Let's get into it, starting with the big picture, the consolidated numbers. What really jumps out at you from those top-line figures? What's the kind of headline story?
Well, what's really fascinating, I think, is the strong overall growth, but specifically how the profit growth really outpaced the revenue. So for the quarter ending June 30th, 2025, Bajaj Finserv reported consolidated total revenue of 35,451 crore. That's up 13% from the same time last year. Pretty solid.
Okay, 13% growth. Seems decent.
But here's the kicker. The consolidated profit after tax, the PAT, hit an all-time high for a quarter. 2,789 crore. That's a 30% jump year on year.
Whoa, okay. 30% profit growth on 30% revenue growth. That's significant.
Exactly. It's not just about getting bigger. It signals some serious operational leverage,
Yeah.
Better efficiency, maybe better cost management. They're growing smarter. And it's worth pointing out, if you adjust for those unrealized mark-to-market swings on investments and add back realized equity gains, basically smoothing out market noise, the PAT growth was even stronger, 33%.
Right, so the underlying operational profit growth looks even better, gives a clearer picture.
Precisely.
Okay, strong overall picture painted. But Bajaj Finserv, it's this huge ecosystem, isn't it? The real insights often come when you break it down. So let's peel back the layers. Where's this growth really coming from? Let's start with the lending powerhouses. First up, Bajaj Finance, BFL. That's their flagship, right? What's the story there for Q1?
Yeah, BFL just continued its really robust trajectory, strong on customer growth, strong on assets. Their customer base grew to 10.65 crore. That's over 100 million customers, up 21% year on year. That's a huge pool for future business.
A massive base.
Yeah.
And loans.
They booked 1.35 crore new loans in the quarter. That's up 23% from last year. Shows demand is still really strong. And assets under management, the AUM, saw healthy growth too, 25% year on year, hitting 441,450 crore.
Okay, and how did that translate to the bottom line for BFL itself?
Well, net total income was up 21% to 12,610 crore, and their PAT, their profit after tax, increased by 20% to 4,699 crore. So solid performance feeding into that consolidated number we saw.
Makes sense. What about asset quality? Always a key thing to watch with lenders, especially during high growth.
Good point. So while their asset quality is still strong overall, gross NPAs were at 1.03% and net NPAs at 0.50%. That is a slight increase compared to last year. Nothing alarming yet, but definitely something they'll be watching closely, managing that growth carefully.
Right, something to keep an eye on. Their capital adequacy, still looking good.
Yeah, very healthy, 21.96%. So they've got a solid buffer there.
Okay, now besides the performance numbers, something else caught my eye with BFL this quarter. This share split and bonus issue. Can you unpack that for us? What's the thinking behind a move like that?
Absolutely. So this wasn't just like a routine adjustment. It's often a strategic play. What they did was, first, they subdivided the shares, reduced the face value from euro down to €1 per share, makes each share cheaper. Then right after that, they issued 4 fully paid bonus shares for every 1 share someone held.
So making the shares more accessible, potentially lower price point.
Exactly. It can attract more retail investors, increase liquidity in the stock. It can also be seen as, a signal of confidence from management, like, we believe in future growth and we want to reward our shareholders, broadens the base.
Interesting. Okay, so that's BFL. What about the other lending arm, Bajaj Housing Finance? How did the mortgage business hold up? You hear things about the real estate market maybe cooling a bit.
Yeah, BHFL actually delivered a really solid performance, especially considering what you just mentioned. Their AUM grew 24%, reaching 120,420 crore. And their PET was up 21% to 583 crore.
And this was despite market headwinds.
That's what they highlighted. They specifically mentioned a moderation in the real estate market and intense competitive pricing. So achieving that kind of growth in that environment, it really speaks to their operational resilience, their ability to compete effectively.
And asset quality in housing. Generally safer, but
Looked very healthy. GNPA at just 0.30% and NNPA at 0.13%. That's excellent for a mortgage lender. Really strong.
okay. So the lending engines are firing pretty well. Let's pivot now to the other major pillar, insurance. Starting with the general insurance side, Bajaj Allianz General Insurance, or BHAs. What's their story this quarter, especially with that regulatory change you mentioned impacting things?
Right, BHA had a good quarter, definitely. Top and bottom line looked good. Gross written premium, GWP, grew 9% to 5,202 crore. But yeah, that regulatory change is key to understanding the number. They now have to account for long-term products on a 1N basis.
Okay, break that down, 1N.
So instead of booking all the premium up front for, say, a 3-year policy, they now spread it out evenly over the 3 years. 1/3 each year in that case.
Ah, okay. Like a subscription model almost. Makes the revenue look smoother over time, maybe lower in the first year.
Exactly. It gives a more accurate picture of recurring revenue, but can dampen the reported GWP growth number in the short term when the change first hits. The really telling thing is, if you exclude this accounting change and the sort of lumpy, tender-driven crop and government health business, their underlying GWP grew strongly at 15%.
15%, so faster than the overall industry then.
Yeah, outpacing the industry. Shows real underlying momentum in their core business, and importantly, that they handled that accounting shift pretty smoothly.
And profitability for BH.
Also good, PAT increased 15% to 660 crore. They said this was mainly driven by better investment performance. Their combined ratio, that key measure of underwriting profitability for general insurers, was 103.6%.
Which is slightly over 100%, meaning an underwriting loss.
Technically, yes. But remember that one impact, if you adjust for that, it improved to 102.5%, better than last year, even with higher acquisition costs. So efficiency is improving.
Right. And their solvency, still strong.
Very strong. Solvency margin at 334%, way, way above the regulatory minimum. Rock solid financially.
Okay, that regulatory piece sounds tricky, but navigating it while still showing that underlying growth, that does say something about their agility, doesn't it?
It really does. It suggests they've got robust systems and strong relationships to manage those kinds of changes.
All right, so that's general insurance. What about the life insurance side? Bajaj Allianz Life Insurance, Mayelic. What's their strategic focus right now, and how's that playing out?
So Bajaj is interesting. They're in what they call a transformational phase with their Bajaj 2.0 strategy. The focus is very much on sustainable and profitable growth, not just growth for growth's sake.
Okay, Bajaj 2.0. What did that mean for the numbers this quarter?
Well, their retail weighted received premium, RWRP, which is a key sales metric, was actually down slightly, -3%. They said this was because distributors were still adapting to new product structures they've introduced.
Okay, so sales were a bit muted, but
The value of new business, or VNB, which is arguably more important for long-term value as it measures the profitability of that new business, saw an impressive 39% jump, reached 145 crore.
wow, 39% VNB growth despite lower premium. How does that work?
It's down to a few things they mentioned. Product restructuring, shifting the product mix towards more profitable types of policies, and some serious cost rationalization efforts. Getting more bang for their buck, essentially.
So the business they're writing is much more profitable.
Precisely. And that's reflected in their new business margin, the NBM, which significantly improved to 11.1%. Higher margin means healthier profits down the line. And their shareholders' PAT also saw a big jump, up 76% to 171 crore, though they noted this was primarily due to higher investment income this quarter.
And solvency for Bajaj.
Also incredibly strong, 343%, among the highest in the industry. So like BAG, very well capitalized.
Okay, so lending strong, insurance showing good underlying trends, and profitability focus. Now let's talk about the future bets, those emerging businesses. They're still making losses on a consolidated basis, right? But what's the big idea here? How do these fit into the grander Bajaj Finserv plan?
Yeah, that's right. As they expected, these emerging ventures contributed a consolidated loss of 142 crore in Q1, but you have to see these as strategic investments, really. It's not just about launching standalone companies, it's about building out an integrated ecosystem, capturing new growth areas like health tech and digital marketplaces, boosting customer stickiness, maybe cross-selling, and using tech for an edge. It's a long game.
All right, playing the long game. Let's break them down quickly. Bajaj Finserv Health.
Okay, Health saw revenue grow 17% to 243 crore. Their goal seems to be this integrated platform covering outpatient, inpatient wellness. They're expanding partnerships, even processing claims for state government health schemes now, apparently doing over 50,000 OPD claims a day for one state scheme.
50,000 a day. That's scale.
Yeah, and they mentioned using Gen AI to help with accuracy and fraud detection there. Shows that tech focus.
Okay, next, Bajaj Finserv Direct. That includes the markets platform and tech services, right?
Correct. Now, Bajaj Markets saw a revenue decrease, down 36% to 81 crore.
Oh, why is that?
They attributed it to a scheduled change in Bajaj Markets' digital journey in the interest of customers. So it sounds like a deliberate strategic shift, maybe optimizing the user experience or platform rather than an operational slip-up.
Interesting phrasing. Strategic adjustment, not a decline.
It seems that way. They did add 4 new partners, reaching 100 unique partners on the platform, so the marketplace itself is still growing. And the other part, Bajaj Technology Services actually did well, won 7 new clients, got an AWS Advanced Tier partnership, showing traction there.
Got it. What about the asset management company, the AMC?
This one's showing really impressive growth. AUM soared 107% year on year. It's now at 25,011 crore.
Wow, doubled in a year. Still loss-making, though.
Yeah, still reporting a PAT loss, about 52.1 crore for the quarter. That's expected as they build scale and brand presence in a very competitive mutual fund market. But that AUM growth really signals market acceptance. They talk about using differentiated strategies, something called INQBTE.
INQBE. Sounds sketchy. What is it?
It seems to stand for using informational edge, quantitative analysis, and understanding behavioral finance. So trying to combine deep data, rigorous models, and market psychology to find investment opportunities, moving beyond just standard approaches.
Okay, more systematic, data-driven approach. Makes sense. And finally, Bajaj Broking.
Broking had a good quarter. PTAP was up 37% to 41 crore. AUM grew 39% to 6,098 crore. They're serving over 1 million customers now, 10.56 lakh. So solid growth in the retail broking space, too.
Okay, quite a lot happening in those emerging bets. Now let's zoom back out, connecting all these pieces. Were there any big strategic moves this quarter beyond the segment performance, and how does Bajaj Finserv see itself positioned in the wider Indian financial scene?
Yeah, the huge strategic development is definitely the ongoing process to acquire Alliance's 26% stake in both the insurance joint ventures, Bajaj and BALIC. They've got the key regulatory approvals now from the CCI and IRDI.
Right, the competition and insurance regulators, so that's moving ahead.
It is. It'll happen in stages or tranches. The first minimum chunk, 6.1%, has to be done within 6 months of the IRDI approval, and they expect to acquire the full 26% by October 2026.
And the significance of that, full control.
Exactly. Full ownership of these major insurance businesses. It simplifies their structure, probably allows for faster decision-making, and could unlock deeper synergies between lending and insurance down the road. Big strategic consolidation.
Makes sense. And how do they talk about their overall market position? Any key pillars they emphasize?
They talk about their holistic growth pillars, which, sound like corporate speak, but they do reflect their strategy. Things like deep and wide distribution, having a diverse product range, driving efficiency with tech and data analytics, which we saw examples of managing risk and capital well, and this constant focus on customer obsession. That seems to be their playbook.
Okay, that playbook. How does it fit into the bigger picture of India's financial landscape, especially with this massive digital push happening everywhere? What are the opportunities, maybe the challenges, for a player like Bajaj Finserv?
Look, the pace of digitization in India is just incredible, right? And that creates massive opportunities. You mentioned the Ayushman Bharat digital mission, over 79 crore ABHA IDs, 64 crore health records linked. That's a huge digital health infrastructure that Bajaj Finserv Health, for example, can potentially integrate with.
And payments.
UPI transactions hit 18.4 billion in a single month, June 2025. It shows how deeply digital payments are embedded. And the overall fintech market is projected to hit USD 422 billion by 2029, growing at a CAGR, a compound annual growth rate of 27%. That's explosive growth.
So a massive digital wave they can ride.
Definitely. But the challenge isn't just having digital channels. It's about truly innovating with them, creating seamless experiences, building trust digitally, especially across India's diverse population. That's where the execution matters. Plus, the insurance market itself still has so much room to grow. Penetration rates, life at 2.8% of GDP, non-life at just 1.0% are way lower than many other Asian countries.
Huge untapped potential there.
Absolutely. So for a company like Bajaj Finserv, with its integrated model spanning lending, insurance, and these new digital ventures, the ability to combine these offerings and leverage that digital transformation is, well, it's their key opportunity, isn't it?
Yeah, it positions them quite uniquely. Okay, one last area to cover, something increasingly vital, ESG, environmental, social, and governance. What's Bajaj Finserv doing here? Why is this important for a financial giant?
They seem to take ESG seriously, framing it as core to creating sustainable value, not just a tick box exercise. Their focus areas are pretty comprehensive. Governance, obviously acting with integrity, financial inclusion, using their products to reach wider society, environmental actions, minimizing their footprint, social welfare initiatives, customer focus, human capital, how they treat employees, cybersecurity, stakeholder engagement. It's broad.
Any specific examples or commitments that stand out?
Yeah, the Bajaj Beyond initiative is pretty significant. The whole Bajaj group has committed 5,000 crore over 5 years to social impact programs. That's a huge number.
5,000 crore,
Yeah.
wow.
Yeah, aiming to impact 2 crore people. And they have tangible examples. Generated 84 million kilowatts of wind power, installed solar, planted trees. On the social side, microfinance reaching almost 3.5 lakh women, general insurance covering millions of farmers and lives under government health schemes like PMJAY-MA. Their total CSR spend was 336 crore last year, benefiting over 4 million people.
So it's not just talk. There are concrete actions and significant investment behind it.
It appears so. And look, for a company like this, strong ESG isn't just nice to have. It builds brand trust, attracts investors who care about this stuff, helps manage risks, and ultimately builds a more resilient, sustainable business that's, aligned with where society is heading.
Right, it's increasingly part of the core business strategy. Well, this has been quite the deep dive. We've seen Bajaj Finserv hitting record profits driven by solid performance in lending and insurance, but also making these really strategic bets on future growth areas.
And consolidating control over key assets like the insurance JVs.
Exactly. All while keeping an eye on efficiency and those ESG commitments. So thinking ahead, as Bajaj Finserv pushes this integrated, tech-driven model, especially with full ownership of insurance coming, what kind of ripples might this send through India's financial sector? Could we see others trying to build similar ecosystems, maybe a new wave of large integrated financial conglomerates? Definitely something interesting to watch.
It could certainly pressure competitors to think more holistically about their own offerings and digital capabilities.
Well, we hope this deep dive is giving you some valuable insights, maybe spark some questions of your own. Thanks for joining us.